for the lows to break.
Yeah, and honestly, this current candle has broken above the previous two candles, so it's just back
Okay.
in this range right now, anyways.
Okay. We'll take a look at it. We'll break it down and see what we're looking at here.
All right.
All right, Sharma, we live on YouTube?
Yes, sir.
All right, awesome. So I ended up just erasing everything over here. I was just marking off a few key levels. As you guys know, 156, we got 149. This is typically what I like to do, especially when I do erase the entire thing. I like to have those historical levels, but here I'll just end up marking off some of these significant levels like 166, that area we've been rejecting multiple times. You can mark off 168. Obviously that previous support over here to the left, and then the wicks to the left as well. And then you got a couple levels in here that we'll see on the lower time frames. But we have been in this bullish trend since COVID, as you guys know. And right now, more importantly than trend lines, is we're looking at certain levels, and it looks like we're holding this support over here on the monthly, right? Monthly ended up opening up pretty strong, pushing up into that 166 area, but then we ended up rejecting, right? We're a much weaker body right now than we were, previously in the week. So right now, what are we doing around this level here? Weekly, we ended up getting a massive liquidity grab, going all the way from 149 within 2 weeks, 149 all the way up to 166. So now you're getting that retracement here towards the end of the week. Is this candle going to end up flipping bearish, or are we just retracing right now to then eventually end up closing a fairly strong bullish candle? Looking at the daily now you can start to see some of the previous levels over here to the left that you want to mark off. So we had that previous resistance or support over here around 160. You can always mark it off at 160. But right over here, I'm seeing all these wicks and everything. Again, you can always adjust it to right here. But right now, it's not as important right now because price is up here on the daily. So right now, again, you see that level 166 being rejected multiple times. We kind of got a fake out right here. And now we come right back into this area when we reject once more this week, right? So 2 consecutive daily bearish candles, very strong as well. But can we hold support, or are we going to continue back down into these areas over here? Looking at the 4 hour, now it starts to get a little bit easier to break down. You're now looking at your most recent support, which right now we're holding over here. And we just had a resistance hold right over here. Previous resistance and support here to the left as well. And right now we're breaking above, right? And we have that clean price action over here above this previous resistance. Looks like we got that clean close above. This candle created its bottom wick past the high of that candle, and now we're retracing a little bit. So can we hold this as a support to continue up and continue to create higher lows? Because ever since 149, we've been pretty bullish, right? Even though we've gotten these 2 consecutive daily bearish candles, retracing back into this area, we're still respecting this previous support, right? You can always draw it like this as well. We're still respecting this whole area right here. Once you start breaking that area, we're in a bearish market on the 4 hour, right? That's when you know you got safe sells to continue down. Can you grab these right here? Absolutely, but it's going to be a little bit riskier. This is what you want to wait for as far as like any higher time frame sells, because now you're breaking below 160. If you look at the 1 hour now we can just adjust very simply. Get that previous support. You have our previous resistance over here. Again, we got that close above with this strong bullish candle, but barely a top wick over here. Then you end up getting this strong bearish candle. Past the high right away, close a strong bearish candle with a wick to fill. This candle already created a top wick, and now it's starting to flip bearish. Right, so can we hold this as a support to continue up into this area right here for a nice scalp? Get about 82 pips, 81 pips right in that area. We'll call it 80. Alright, so plenty of room for you to trade in this range. And then, of course, you can always hold that runner, continuing right back up to this resistance up here. Right, and you got an even bigger range over there. You may want to secure somewhere around here. But right now, we just got to see if we're going to hold support. Now, again, you're not going to marry that bias. You're going to see what happens if we also break back into this zone over here. Right? Can we close back inside, retest this area? Is this going to be a fake out to continue down? That's always a possibility too. But we'll see. What does the Japanese yen look like today? The yen actually broke support over here, right? We broke support. We made this low over here. Looks like we're retracing over here to end the Asian session. So right now, we're retesting that area to continue down. If that's the case, we could very well be continuing up here on GJ. So we'll see, what NFP brings us. Maybe that changes some things. But right now, we're just looking to see what happens in this area. There's been a ton of sessions this week, I think about 3 of them, where all we had to do was wait for a price to react at a certain level. It's been doing Asian and New York. And once price reacts to that one level, either way, you have a trade. And this is kind of one of them. So again, let's go back to the 30-minute. Yeah, 30-minute is struggling to hold that support. You got a weak bullish candle close right here. Probably readjust that right there. You need a strong bullish. You need a strong bullish close on GJ over here to have any confidence that price is going to continue up. If you do get it, you may want to, be aware of 162, 600 up here. But I think with volume, if you get a strong bullish candle, we should be pushing through that area back up to 163. But again, let's look at the higher time frames again. 4 hours still looks good, but this candle is getting a little bit weaker. And we do have about an hour and a half before that closes. Daily is creating a higher low so far. So we could be holding that support, or this is a weak daily candle for next week, us to create a top wick and then continue this thing down. Yeah, you see how we're flipping over here? So that's what we get on GJ. Let's wait and see, be patient, wait for your setups as well. Just know that you're trading against the daily trend right now, with us creating these lower highs. And also, do you have a... Okay. So right now you have a valid bearish trend over here that price is meeting up with as well. Right? Perfect lower highs. We have these impulsive moves coming down. We get these short pullbacks and then a big impulsive move down. And we kind of consolidate. If you look over here, after this impulsive move, we created this resistance, faked it out, and then closed back into the range to continue down. So right over here, we create this low, consolidate. Could we get this fake out right over here and then continue down for a further impulsive move? Right? Looks like gold 4 hour breaking the lows. Okay, let's go over to gold right now. Get a nice little breakdown. Again, some historical levels, 1680, or actually 1615 is that low that we pretty much created last week. Right at that wick, you got 1680. I'd like to mark off 1700 because that's a significant level as well. 1750. You got 1830 up here. Some of these are now getting irrelevant because we are so close to 1700 right now. But we'll mark them off anyway. 1900, 2000, and last but not least, 2075. Alright, so now again, since 2075, the Fed has been signaling increases in interest rates multiple times this year. So right now we've just been coming down ever since the attack of Ukraine, on Ukraine. So we've been in this bearish trend, lower lows, lower highs. Now this candle, current monthly candle already, is very bullish here, right? No bottom wick yet. So could we be forming that top wick to continue down? Obviously NFPs this week, a lot of, NFP is really going to affect gold, I believe, today, especially if we get surprise numbers. So looking at the weekly here, again, you can see a clear bearish trend. Got the impulsive moves, short pullbacks, impulse move, short pullback, impulse move, short pullback, impulse move. Right? All a pattern. Could very well be as well. But looking over here, looks like we're kind of reacting to this resistance over here to the left. We'll see what that looks like in the lower time frame. But right now we had this bullish move, this bullish run all week, pushing us up into this previous resistance here to the left. And now it's starting to reject a little bit. So we'll see what's going on over there. Alright, daily. Daily's looking great as well. I'm starting to see what you guys are talking about with the 4 hour sells here. Got a strong bearish candle close. Another bearish candle close, a little bit weaker. But this daily candle already has a top wick and it's passing the low of that candle. So can we get this wick fill coming down into 1700 over here? And possibly, can we continue back down to 1680? Alright? And continue down from here. I could see with NFP this week, we could get one last pullback, and then price continues right back down. Looking at the 4 hour here. 4 hour still kind of in a consolidation. We have this support right over here. You are creating lower highs, which I like, right? Another lower high over here. We're respecting this previous resistance. And price is coming down with this current 4 hour candle. So you got kind of a clean move here based on the 4 hour back down to that 1700 level. Somewhere in here with a clean move to the left and some wicks to fill. Looking at the 1 hour, now we can adjust our zones over here. You have this as a support. Right? So price right now, that's a very clean bearish candle. I love that candle with a wick to fill. This candle is creating its top wick, now flipping bearish. But we're now starting to approach this. I just don't want to see you guys getting trapped before NFP. You guys do have this area right here that you do have to be cautious about. But then you get this range coming right into this area right here. Clean move to the left for about 100 pips right here. Right, so that's your golden area that you want to trade in. But up here, you could get rejected at any time. But like I said, like I was telling Dylan before, you could very well see some nice candles up here, nice setups where we are rejecting this area. Right? You can see multiple setups rejecting this area over here, and it could confirm that we'll continue down. But like I said, it's just safer to wait for price to break this area. Yeah, 30-minute dig past the high of the previous candle. It's now flipping bearish over here. It's 748. So again, I think you're safer just waiting for that close below this main level over here. Get some clean moves. You very well grab like an impulse entry if you get a bearish candle close below this area. Right? If you get something like that, maybe you get the top wick formed, price flips bearish, fills that wick, you secure down there, and then price kind of like rejects that area. You guys know how gold is, so that could very well happen as well. Right. So who is iPhone 6 Plus? So gold 4 hour breaking low. Minor zone needs to break. Yep. Yeah. Yeah, this whole area right here needs to break.
What's going on with the
What's up, Larry?
Sorry about that.
Oh, you're good, man. I just didn't know if you were trying to say something. Alright. So, NFP, let's see what we are looking at as far as data is concerned. And what to expect. See that candle starting to flip. Sharma, do you want to break down US 30?
That too, but also from a fundamental side, there's a couple of articles I want to go over.
Sure. I'll let you share your screen.
Perfect.
Yeah, we're expecting a lower employment change. 248,000 jobs over here they're expecting. I think, again, anything above 300 will be pretty solid for job numbers, just because they got 315 last time. So we'll see what we end up getting over here. But, Sharma, I'll let you share your screen. Let's see. There you go.
All right.
Got 23 of you guys in here today.
So
Awesome.
I want to go over some articles first. So we know that last quarter we had towards the end Bank of England pretty much stepping in, intervening into the markets. So the reason why they did that was to bring in a little bit of more optimism into the markets from like an investor perspective. Also because as they're increasing interest rates, their liquidity in the financial markets is starting to dry up, right? But as soon as they stepped in, again, that brings in a lot more fear, because now what you have is anytime a central bank steps in into the financial markets and essentially intervenes in any way, it's usually to provide liquidity, which is pretty much the opposite of contracting money supply. So as we continue down here, what you guys are going to see is this contraction between, or this contradiction, I should say, contradiction between this monetary policy and financial stability. So it seems like right now what's happening is, as the bank is stepping in and is trying to intervene into the markets, it's trying to increase, first of all, interest rates in order to combat inflation, right? And then along with that, in order to provide liquidity into the markets, they're also intervening. So now there's pretty much this back and forth that's happening in the markets. That's where a lot of the uncertainty is coming from. So when you're looking at it from a technical perspective, this consolidation that's going on the monthly time frame, price taps into a resistance. Now we've seen like the entire move like retrace back down. That's basically what's happening. That's the market sentiment that's setting up from this fundamental perspective, that there's back and forth that's happening with the Bank of England, which is pretty much raising this concern into the markets that, hey, we're not doing this for the long term, right? This is just going to be temporary. It's going to be it's only going to be targeted. But now what you're doing is increasing interest rates, so trying to move into contractionary monetary policies, but you're still providing quantitative easing. That's essentially what happened as Bank of England started to purchase up the government debt. So that's what, from a fundamental perspective, when you guys are looking at GJ and all of that, and prices tapping into those monthly support areas, weekly support areas, it's coming back to previous levels where price pretty much dumped down from. This is the reason, right? From a fundamental perspective and also the market sentiment perspective. There's just way too much uncertainty. In an ideal situation, if a central bank continues to increase interest rates, they should have enough consumer sentiment or enough consumer confidence, business confidence. That's the ideal situation that would lead you into economic growth. But when you start increasing interest rates and then your liquidity starts to run dry into financial markets, then you have to step in to provide liquidity. Obviously, from a fundamental perspective and from an investor perspective, you have a much bigger problem than just inflation, than just increasing interest rates to control inflation, right? So you have to, from a holistic perspective, now what you're doing is you need to provide that quantitative easing, you need to expand that money supply, for your financial markets to work and not crash and not come back to like parity, for example, with the US dollar, for your equities to gain strength, all of that. But you also have to continue increasing interest rates, because now you have a huge inflation problem. And it's not just the UK, this is essentially happening across the board. Now moving on to another article, as you continue to increase interest rates, especially Bank of England, they're saying that this is still going to continue to be hard for households and businesses and things like that, but they're going to have to continue this course. They're going to have to continue the increasing these interest rates in order to combat UK inflation. So this is this pretty much dilemma that this central bank is sitting in at the moment. And then when we're looking at just NFP coming out, if you guys haven't, I kind of broke that down yesterday on my Instagram, so if you want to take a look at that. But we were looking at NFP data in the beginning of the week, where the number was 265. Now, when you look at the entire week, if I were to give you guys like a quick breakdown, essentially, when you're looking at from the beginning of the week coming into like today, what we've had is, let's scroll down to Tuesday, where you had the job openings dropping down, right? Around this time, the questions were, are these jobs are these jobs not opening up, like they're being filled, or are these job postings being taken down because they're not being filled and unemployment is starting to increase? And obviously we knew the answer to this by Tuesday, because in the last couple of weeks there was a ton of news about all these companies that are doing layoffs. I'm pretty sure you guys have heard me, say this like a broken record on even the weekly outlooks in general in the last couple of weeks, that when the Fed comes out and they're saying that the labor market is strong, that's not true at all, because of the economic data, right? And also because of the news that you're getting, where you're seeing all these big tech companies doing these massive layoffs, doing hiring freezes, everything like that. When we continue down into Thursday, that's really when we got that confirmation from the challenger job cuts. The previous was sitting at 30.3%, and then we just got a spike up, coming up to about 67.6%. Look at that massive increase. Just another pretty much a 37% increase, right? Unemployment claims, they've started to increase. You're sitting at 190K. We're expecting obviously an increase in that, but look how much we beat the price. If you go back into the weekly outlook and take a look at the economic calendar little portion that we're going over, this number was sitting at 265K. They modified that yesterday to reflect 248K, which basically is what they're trying to do. Obviously, when you kind of manipulate the data, they know that there's jobs that are being taken down. These jobs are not being filled. These jobs are actually being taken down, the actual postings. So what this does is, when data comes out in the next 30 minutes or so, and it's a number between 248 and 315, the market is obviously going to react to it, somewhat on these lower time frames. Expect to see 15-minute candles breaking highs and lows. It's normal, right, for NFP. But in the long term, when we're talking about where can we end off going into the end of New York session today, for let's say GJ, or I could potentially see gold having a lot more volatility, but even US 30, things like these, they're probably going to end up sitting at and closing out at some of these key areas that we're sitting at the moment, which is those weekly levels, those monthly levels, and even those daily levels. But if this number comes out even lower than 248, that's when you're going to see this massive drop down in US 30. But if it comes out higher, then obviously that's going to bring in some more optimism. So this is one way to pretty much stall out this entire sell-off that we know is happening in the equities at the moment. Does that make sense for everyone?
It's basically all the sentiment, thinking of what the Fed's going to do.
Yes.
Honestly, at this point, whatever the Fed says, just do and think the opposite.
Yeah, and this way, that if this number comes out, let's say at 250, 260, or something like that, at least it's still better than what they had forecasted, right? Or quote-unquote forecasted, really, they modified it. This is one way for them to kind of get this confirmation that we can continue increasing interest rates, because a central bank's dual mandate is price stability and maximum employment. So obviously you want data coming out in your favor so you can continue increasing these interest rates.
Yes, absolutely. I find it interesting that I feel like, majority of you guys in here weren't old enough for, didn't really understand what 2008 was, including myself. Back then I was in 8th grade at that point. Not to make some of you guys feel old, but that was, us being in the markets and doing this for a living now. It's a lot more interesting, obviously, but also we're a lot older. So right now we're going through our own recession, our own era of tight monetary policy, just weak economy, weak jobs, weak everything, pretty much. The bubble that we're in as well. It's just interesting being a little bit older going through this now, and this is going to be our recession that we got to live through. It's going to make us tougher, and but just know that we have to go through it, right? To have a healthy economy at some point, we're going to have to go through it, unless you keep bailing banks out and keep inflating the bubble.
Yeah, and long term, that's not sustainable.
Yeah.
But
Exactly.
even if, you went through 2008, you're young, but, a lot of us still remember what the effects were. We
Oh yeah,
saw,
that changed my whole family. Like
yeah,
that was 2008 rattled everything pretty much. So
yep,
we all know what happened. We all realize it. We've all seen The Big Short, Margin Call, all these movies. But as adults now, people that pay bills and contribute to society, you're no longer in school or in the schooling system. It's you guys are going to be affected one way or the other. And if it's not you, it's a family member, and
yep.
that's where that pressure to provide and all those things for a lot of you guys starts to kick in, and you guys should feel that. You should feel that wants to take care of your family and stuff like that in times like this. And that's why you guys work so hard.
Absolutely. So let's go ahead and hop over to US 30 here. So when we're looking at last quarter, let me zoom in onto these candles a bit more. You got that massive liquidity grab to the upside. Obviously, when you drop down to lower time frames, you'll see candle closing here. Price pulls back down. Look, there's no bottom wick on this candle. It's closing at the lowest of its range. So obviously, at this point, what we've done is come back into these areas here and held onto a strong support, right? Where the current quarterly candle, again, it's very early on, it's just the first week of this new quarterly candle, makes a little bit of a bottom wick, and then it flips back up, right? Continues pushing up. Obviously, you need this in order to create those top wick rejections, in order to correct the massive sell-offs that have happened in the last couple of weeks. So that's based off of the quarterly time frame. We know that we're going to continue pushing down, and as soon as we come back into some of these areas here, back from like 2018, we are going to see the Fed essentially stepping up, and we're going to see some sort of intervention into the financial markets, because obviously they're not going to let this entire thing drop down any lower than what happened in 2020. That's just not going to happen, right? And we know that. Let's go ahead and drop down to the monthly time frame. So same thing here, a very strong resistance back in 2019, and then 2020, before even the pandemic and lockdown and everything like that were actually introduced, which was back in March, this when we started dropping down, we had already started this corrective move, right? And then that's the exact same area that we're tapping into right now. So from this 2019 area, that's exactly where we're holding on to the support. And now the next question is, can we see price, essentially we've already rejected this area this week, but can we see price pushing any higher than this? If possible, all of that is going to be from a market sentiment perspective, or trying to stall out this entire sell-off in equities as much as you can. How do you do that? Well, we just saw that with NFP data being manipulated essentially this week. So with this top wick rejection, grabbing that liquidity, what I want to see here when we drop down to the daily time frame, to the weekly time frame, to the 4-hour time frame, is resistance being held. And then you see another sell-off coming right back into this 28,800, 28,500 mark. Is that going to happen to end off the week? I highly doubt it, unless NFP data actually comes out and it's lower than 258K. So when you come onto the weekly time frame, this is where we held on to this strong support, made a little bit of a bottom wick, tapping into these previous resistance areas, and then push back up, breaking, all these highs. But look at what's essentially happening here to the left. This is after the Fed had already provided liquidity into the markets back in 2020, and we started this bullish move up. But obviously the market kind of exhausting out a little bit, coming back and tapping into the same exact area before a massive push up. That's the same area that we've come back into to hold on to a support prior to a retracement back up. And this push up had also happened for liquidity grabs, right? And then a continuation back down from there. And then another sell-off to come back and create new lows. So obviously what we need to do is come back and grab some more liquidity, which is right into this area here. Someone's mic is on, so if you guys want to turn that off so we don't have the background static.
Yeah, just muted it.
Perfect. So now this is where we need to hold on to this resistance if we are to continue the sell-off here. And the chances are that this week we may even close out, if the number comes out anything between the previous and now the new forecasted, the chances are that we might even close out somewhere closer to this resistance, and then going into next week we might see even better movements. This is just the first week of this new quarter, so that's why we also need to be very careful. When you drop down to the daily time frame, this is where you see your resistance being held, but also notice how the next daily candle here barely even breaks the low. Yes, it's closing in the zone. Clearly we know that there's bearish volume. And the current daily candle breaks the low also, but comes back right into this range. So when you drop down to lower time frames and you see actually a setup like this on the daily, and then you drop down to lower time frames, just know that there is going to be consolidation here. And until you break out of that consolidation, there's no trade opportunity. So you come onto the 4-hour time frame, and this is essentially when you start to see a massive rally up, this entire week, and then price now coming back into this 30,300 mark, push back down, and now what we're doing is retesting into this 30,000 mark, which if you have watched the weekly outlooks or any other previous breakdowns that we have done US 30, that's a very key area. So that's what we're retesting into right now. In order for me to look for any sell-offs, I'm going to remove this here and kind of create the zone again just to narrow it in even more. In order for me to look for any sell-offs, I need price to hold on to a resistance right into this 30,000 mark, going into the next 25 minutes. And then holding onto resistance here, and then a sell-off to come back down into this 29,800 or even lower than that, and then continue pushing. Or the chances are, again, if the data comes out, anywhere mid-range between 315 and 248, you might even see this thing just ending off as a consolidation. You drop down to the hourly time frame, same thing here, a little bit of consolidation, a quick little fake out, push right back up into this 30,000 mark, and we're just holding on to this area as resistance. It's not something new. 30,000 is a very key area. We've seen consolidation here before a fake out and then push right back up, 2 days ago, and then after that another sell-off. We've obviously created a new low here now, and then a retracement. Now can we hold on to a resistance right below this area and then a sell-off? That's what the trade is going to be. If the data comes out, let's say it's on the higher end, closer to 315, so like 300 or 310 or 315 or anything higher than that, then we might even see a push up above this. So that's what it seems like from an hour perspective, that we're holding on to a support here, and then this new hourly candle making a bottom wick, but can we even break the previous highs to continue pushing? If this area, if 30,000 is cleared out, then you can look for those scalp buyer opportunities on US 30 to continue pushing up. So from a higher time frame perspective, we could just end up, consolidating a little bit. Yes, we're holding on to a support, but you don't have clean buy opportunities until these wicks here are broken. Drop down to the 30-minute, and this is where you already start to see the volume dying down. You hold on to a support, and then the following 30-minute already rejected the highs, comes back and closes almost like a doji. The next 30-minute candle breaks the low, but comes back and closes bullish. The new 30-minute candle, a little bit of a bottom wick, but really the range that we're stuck in until actual data comes out, and you're going to see this happening too a lot of times when there's high impact data coming out. This is the range. Until this is broken, there's no trade. Any questions?
No, thank you.
All right. All yours, Steph. Go for it. Stephanos here.
He said in the chat that it was gonna be right back.
Oh.
Hey guys, I'm here. Sorry about that.
No, it's all good.
Run to the bathroom. Alright. So, looking back on gold, again, the 1 hour did end up closing bullish. Great breakdown, by the way, Sharma.
Thank you.
So right now, again, obviously it's 8 o'clock, New York open, so we're just waiting on NFP now. We're still holding that support. So Sharma, what do you think we can expect over here with NFP? You think we will be anywhere above 250,000? Just adjust.
On gold here?
No, on jobs.
Oh, on jobs. I think we are going to come out. Like, it's obviously going to be lower than 265, so I'm assuming like it'll be closer to 250. I think even after this modification, if job data really comes out lower than 248, then that was not a good thing, or a good job done on the modification side, right?
Mm-hmm.
So that modification happened only to stop the markets from having huge volatility and huge sell-offs. And we have a lot more data that is going to be reflected into the coming months, because a lot of these companies are still doing layoffs, and some companies have just started doing layoffs.
Yeah. Yeah, you're starting to see the hiring freezes everywhere, pretty much.
Yep.
You can just see it like slowly unraveling with what's going on, which is not good, but it's
that's
good
basically
to be
how that's basically how like low impact data is translated into high impact data. where if you start looking at what's happening around you instead of just the data points that are being, provided to you by the Fed and the sentiment that's being provided by the Fed, these are things that you can already predict.
Absolutely. It helps. Always helps. All right.
Someone has a question on YouTube. Finding it hard to pick 1 to 3 pairs to stick with. What do you think about sticking to gold and GJ?
Awesome. What are you trading right now?
So what are you trading right now, Solly?
Get rid of this alert.
In general, I think we've answered this question before, but happy to do that again. If you are starting off, what I would suggest is start off with like a major pair, something that's a little bit slow. So you don't, right off the bat, you're not starting off with something that's fast, that's a lot of volatility. I think that in general, when you start off with something like that, it can spike a lot of your the risk management, psychology problems that we tend to see in people, things like that, because you want to be part of every single move. Versus something that's a little bit slower, you have a couple of days to just watch it, and you can ease into it essentially, right? Think about it before you actually start running, you're gonna start off with walking, then you're gonna start off with jogging, right? And then you're gonna get into running, then you're gonna start doing sprints, then you're gonna get into marathons and things like that. Right off the bat, you're not gonna go and run marathons, right? It wouldn't make sense. So it's the same thing, kind of approach anything. I'm not just talking about trading, anything in general. You want to start off with baby steps. So I would say start off with something of a slower pair. So AUD/USD, for example, would be perfect. Start off with something like that, right? And then try to understand what's happening there prior to moving on. So maybe from AUD/USD, if your ultimate goal is to move into GJ or gold, I would say from there, move into something right now, obviously don't do GBP/USD. Maybe try to do, some other pair that would involve the dollar. I would go, let's say EUR/USD, for example, something like that, and then start to make your transition slowly after you start understanding, from a technical level, some of the questions that you want to ask yourself across pairs as you guys are switching pairs, adding on new pairs, anything like that. Before right off the bat opening up a chart that you've never traded before and just looking for trade opportunities, before you do that, make sure you're collecting data on that before even starting to trade it. So if you've been trading AUD/USD, I'm not sure how long you've been trading it, but if you've been trading AUD/USD for a long time, then I would say have the data in hand of, give me 1 second here, we got another spammer coming in.
Is that what they said they trade? AUD/USD?
Yeah.
Okay.
AUD/USD, Euro NZD, gold, and GJ.
That's what they trade right now.
Yeah, it seems like it.
Okay, so they have experience with a slower moving pair and a faster moving pair. So one thing I would ask is have you figured out your personality in the market? What do you like? Do you like faster moving pairs, or are you more accustomed to slower moving pairs? And you don't need all that movement. You'd rather have a slower moving pair that keeps your emotions a little bit more in check.
That's how I would start off, with a slower moving pair, and then really get your trading risk management down, your strategy down, and then start moving into something that's a little bit of a faster moving pair. Then you move into EJ or into GJ, anything like that, and then move into gold once you've done the same exact thing with GJ. Collected enough data. When London opens up, how does a pair move? When Asian market opens up, how does a pair move? Are there better movements in New York? So kind of figuring out what your timing's going to look like, what are your trade setups going to look like, what is your risk management going to look like, and trust me, when you move from pair to pair, your risk management is going to look different. So I was just having this conversation with another student yesterday, where they were talking to me about lot sizes and the different pairs. I think this all depends on what pair that you're trading or what asset that you're trading. You can, for example, if you have a $100,000 account, you could easily open up a $5 lot size, a $10 lot size, whatever it is, on AUD/USD, and it's gonna work out perfectly fine because it's not as volatile. Then you move into GJ, then maybe you're gonna decrease that down a little bit, right? Because it is a faster moving pair. When you move into gold, you're going to decrease that down even a little bit. It's going to give you the same results, right, from a monetary perspective, but there's a lot more volatility. And then when you move on to US 30, it's even crazier than gold when it moves. So that's when you're going to have to, decrease that down a little bit too, your lot sizes. So I think it's heavily dependent on what you're trading.
Absolutely. So I was just going on YouTube. I was also just posting something on Instagram for us. EUD, Euro NZD. I would just piggyback off of what Sharma was saying. Like, first of all, it's got to hit your personality as far as like what you're looking for in the market. But I would start with a slower moving pair, and you just need a trading plan. So, do you have a trading plan? Like, do you have something that you follow as far as an edge in the market, or are you just trying out all these different pairs and seeing what sticks, right? Just throwing pasta at the wall. So that's your most important thing. And then what you want to do is start implementing it. Now, if you don't have a trading plan, we have a podcast episode on formulating a trading plan in simple. What's our series called? Secrets of Trading. So if you go over to Secrets of Trading, you'll see that we have an episode dedicated to writing out a trading plan and what it takes to find out if that's actually like a good one, right? So you want to use an implementation process where you maybe backtest 100 different sessions on that one pair with that strategy and see if it even works, right? So you got like a lot of homework ahead of you when it comes to trying to figure out what you actually do want to trade. You have a sample size data of like all these pairs. Now you just got to go see if they work.
Absolutely.
Sally Mac.
Ultimately, you want to get to the point where you can use the same strategy across, whatever that you want to trade. Like, you don't, if you're trading GJ, you don't want to have a separate strategy for that, or like for gold, or like US 30, or like something else. I think that's when people start to spiral into, and they start like spiraling into like just bouncing from one strategy to another. I think something that's more sustainable is something that you can trade across different pairs. So whether that's break and retest, impulse trades, if you want to use like SMAs, EMAs, like whatever else, that you want to put onto your charts, that makes sense to you, where you're able to understand what the market is doing, and not just like, bouncing off of specific levels, and this is how you determine whether to buy or sell. Try to actually understand what's happening in the market. But come up with a strategy, and it doesn't have to be exactly how I trade or how Stefanos trades or how anyone else trades. You can use a mixture of everybody and see what works for you, but try to come up with a strategy that you can kind of copy paste across different assets that you want to trade. But the only thing that's really going to change is your risk management strategy, depending on what pair that you're trading.
Couldn't agree more. All right. Just tagged in something. Okay, so now we get about 12 minutes waiting for NFP. Anybody have any other questions? Got 30 of you guys in here. That's awesome. Great advice. I find myself currently revisiting slower pairs now to try and combat my greed and lack of patience I developed from jumping straight into trading fast moving pairs. Okay. All right. Which pairs are you going back to, visitor? Who is that, by the way, Sharma?
I'm not sure exactly.
Okay.
So while we're waiting on that answer, what you guys can also do is start dropping down to the 15-minute time frame or even the 5-minute time frame and look at the volume that you're going to see in the markets now. Obviously, don't execute on this volume, but this is going to start. Hopefully, this starts making sense. What I was talking about when I was breaking down the economic calendar and stuff, like modifying it to kind of shift the sentiment in a way that you're not seeing massive sell-offs.
US 30 is making a little push right here.
Yeah, that's exactly what I'm looking at right now on the 15-minute time frame.
Yeah.
Hopefully this starts making sense what I was talking about when I was breaking down the economic calendar and stuff. Someone got the YouTube on and the Zoom on.
Nice. Not anymore. Alright. Yeah, I didn't really break any US 30 yet today. we'll actually what are some of these levels here? We're getting that little bounce over here off this higher low potentially.
Yep.
Previous resistance, as you were breaking down before. You get that strong 4-hour candle close, bottom wick form, passing the high over here. Get a high formed here to the left.
You just want to be very careful what price is sitting at right now. That's a previous support and even consolidation support.
Yep. It's not worth taking the trade right now, guys.
Yep.
You waited all week. Still open this trade. Oh, you're still in this. Okay. Awesome. Beautiful trade here on GJ. This is the setup I look for all the time. Right? You're here. Strong bearish candle close. Oh, you actually got the resistance formed up here. You get a strong, two strong bearish candle closes. You get this weak candle right over here. And then once this candle creates its top wick and passes the low of that bullish candle, you know, you can take that thing down. Well done. Who was that, Borga?
Yep.
Great job, man.
Borga's killing it.
That's awesome. Love to see you guys succeeding. Alright. Anybody have any other charts they want to go over? Absolutely. Jay Deach, first time on your session, great breakdown. Absolutely. New member for your group? Charm?
Yes, sir.
Awesome.
Welcome, Jason. Feel free to ask any questions too, guys. Even if you're trading a different pair. Oh, I was gonna break down GBP USD. Is he here? Let me check. Matthew, are you here?
Yeah, yeah.
Okay, perfect. I am sorry, I forgot. Let me go ahead and do that now. Alright.
There you go.
Thank you. Perfect.
One of my big issues is my entry. I find my analysis great, but entry lets me down. Okay. Have you been like journaling your trades? What's his name again?
Jason.
Jason, have you been journaling your trades? $31 in here today. Let's go.
Alright, let's go ahead and drop analyze GJ here, or sorry, GU here real quick. So used to saying GJ. But you know, clearly looking at these higher time frames, we're pretty much sitting at low levels that we've never sat in before. So if you're trading GU, you want to be extremely careful, because last time price tapped into this 1.04, like right above parity, we had Bank of England stepping in. And I don't doubt that they're going to end up doing the same exact thing if price does continue to drop down. If, you know, they drop down below parity when you're looking at EU, you know, that's not something that's new. It's already happened. Those are levels that we're sitting at. But if we drop back down below parity for the pound dollar, I do expect, you know, another intervention into the markets. And this is kind of the dilemma that price is sitting in right now. And also the dilemma that the central bank is sitting in right now. So when you're trading this, again, be extremely careful. I would suggest, if you can, just look at a different pair. Maybe that moves something similar. But let's say if you're trading GU, this is how you're going to do it. Or this is how I would do it. So looking at the quarterly time frame, clearly, you know, still pushing down. These are all areas where liquidity has been provided. So in 2020, we know that, you know, a lot of these central banks have stepped in, and that's how we push back up. But clearly still maintaining these bearish trends where price is holding on to these strong resistance areas. So I would mark off, let's say this 1.04 mark. Can we come back and revisit into this? Possibly a high chance. Or we might even just hold on to a support. So I'm going to mark off the current quarterly bottom low here. If you don't have the quarterly time frame, that's perfectly fine. Just pay attention to these levels here now. And then the next level is going to be this 1.115. So if we can break below this, the quarterly is going to be in your direction for these sells. But if price does not break below this, then you're potentially looking for, can we see some more buys as some corrective moves of these massive sell-offs that have happened. So instead of creating another zone, I'll just use this one, because obviously we would have to break above this before we even get up top here. So that's going to be your next target when you're looking at these longer term buy opportunities. When we drop down to the monthly time frame, massive bottom wick, and then a little bit of bottom wick this month, price pushed back up. We're currently bullish, but we have already retested these highs and retraced back down. So clearly there's not a lot of volume for the pound to continue pushing up bullish. Come on to the weekly time frame, and that's essentially where this liquidity was provided. And then this week we broke the high, trying to continue on the volume from whatever was provided last week after a little bit of a bottom wick. But we're coming back, down into these areas at 1.115. In order for us to look for those continued buy opportunities, we would need a strong support here to also be formed, right? So think about like a basic bullish structure where it doesn't just, push up. You're going to see those retracements, and that's what you want to make sure that you're following as you drop down to lower time frames. So after a massive push up like this, clearly rejected at this level, can we see a pullback and then essentially a support being formed here prior to a continuation back up, right? And then eventually getting into this area, this is the formation that you want to see for continued buy opportunities. The market's going to collect orders in two ways: retracements or consolidation. So this is one setup. The second one that you could see is essentially a little bit of consolidation here, and then a push back up, and then maybe a little bit of more consolidation here if you don't have enough bearish volume to continue pushing down, and then a continuation back up. So those are potential setups that you want to keep in the back of your mind for the next coming couple of weeks. When you come onto the daily time frame, obviously a nice massive push up. Price holds on to a resistance here, pulls back down, and it seems like it's trying to hold on to a support. Let's go ahead and drop down to the 4 hour now. The 4 hour consolidating a little bit right at this area. It's not anything that's new, right? Because we've done that here before too. So now what I want to see is, can we end up breaking above this area and continue? If that happens, then you got those buy opportunities to come back up above these areas right here for about 142 pips, going into about 255 pips. This could be your swing trade opportunity, but you need price to break above this zone. If it doesn't, then you don't have a potential buy opportunity yet. It could end up just being a situation like this where it's just a ton of consolidation. Drop down to the hourly time frame, and that gives you confirmation that we're pretty much sitting in a consolidation at the moment, where price pushed up. We filled the wick. Let me zoom in a bit more. So price pushed up, filled that wick, and then came right back down and closed below that area once again. And right now we're pushing back up, trying to retest into these areas. There you go. So price is pushing back up, trying to retest into these areas, but we're failing to continue bullish. So again, just going into the next 3 minutes or so when news comes out, there's going to be a lot of volatility, and then you want to wait for price to have clear break above this zone and then continuation up if you want to look for any continued buy opportunities. Without that, kind of just stay out of this range if you can. It's a no trade range. Make sense?
100%.
All right. Any questions about this, Matthew?
Yeah, okay.
All right. Perfect. All yours, Steph. Go for it.
Absolutely. All right. Should bring this in a little bit.
I'm going to pull up Financial Juice. That tends to give out the data faster than Forex Factory.
Yeah, I have it over here to the right.
Perfect.
All right. I just want to answer Jason over here. Yes, it was. But I'm finding it too stressful. I'm funding it. Too much screen time and ended up blowing it. Now, too much screen time on the live market, or were you back testing as well? See, the 1 minute can really mess you up if that's like your main entry point and the way you trade. Where'd you originally learn how to trade? Like where'd you pick up this strategy from on a 1 minute? Don't be afraid to talk too. It's you can hop on the mic.
It's all good.
All good, man. All right, we have 20 seconds left.
So what I would say, Jason, for that is instead of going on to the 1 minute time frame, start pushing back up into the 30-minute and 15-minute. And obviously we'll work on it together. We'll see exactly what's the potential strategy that's going to work for you. But I would say hop back up to the 15-minute, 30-minute, and then look for your potential trades there.
All right, what do we get here? 288.
All right, closer to that 3K. Watch like a whip back up happen.
300K. We got Andy in the house. What's up, buddy? Looking tired over there.
I didn't know if I was muted or not. Hey, what's up, guys? Good morning.
What's up, man?
Good morning.
How
good
are
morning.
Wow, that
That
was
was for NFP?
a gnarly move right now.
Yeah, a little bit.
Steph,
Now, guys,
I think
I'm
that
sorry.
was the 288 is for the private payrolls. The
Oh, you're right.
non-farm is 265, which is
265.
below what they would have expected.
Yes.
But
Well,
regardless,
they were
watch that whip
expecting
back up.
Yeah, we got 263.
Yeah, there you go.
So again, if you guys haven't been with us before on YouTube or on the stream, we're waiting for the reaction to the news. So like right now, if you were to take a trade, it's pretty much gambling. Actually, it is gambling. You want to wait for the next 5 minute, the next 15-minute candle to close, and just trade the direction of the trend.
Exactly.
That'll be your best bet as far as taking the trade. It's a lot less gambling. It's more calculated.
This, you guys, is if you just started trading, probably your first experience data manipulation. This is how it works.
Man, I had 29,675 marked out.
Wow, really?
Yep, and it just like ran right to it.
Yep.
You had it marked up as far as...
I have it marked as a sell TP1.
Okay.
Andy and I were talking. We were geeking out about this thing yesterday. We got hopped onto a FaceTime, and we were going over like US 30. We were going over like a bunch of different things and just talking about that.
I love it. I love that term, geeking out.
Yep. You don't understand how excited we got as soon as I opened up Forex Factory. I was like, yo. They changed the data.
Yeah. Absolutely. Looks like, wow, unemployment dropped.
Where? Yeah, 3.5.
I was expecting that to stay the same.
Everyone was saying that was going to be the same. I'm surprised it dropped.
So am I. That's crazy.
I think also here, remember Andy when we were talking about like all those people who are getting those retirement packages? So they're not just letting go of, like the older labor market that they have. They're providing like, retirement packages and things like that. Essentially think about like quiet firing, the quiet quitting. Basically that. And obviously when people start retiring, they're not active in the labor market. They're not actively looking for jobs. That also is what plays into your employment rate.
Yeah.
Unemployment rate.
There was a interview with this pro quarterback that was in the league for a little bit, Blake Bortles, and he just retired, and he was saying that he was quiet quitting while he was in the league, like slowly leaving. Yep. That's just a fancy way of saying you're not that good, and you're not putting everything into it, which he obviously wasn't.
It's that too, but there's also like a lot of like when you like an older generation, for example, like the new generation, obviously we don't really care because we know there's a ton of opportunities out there. But the people who have been working for like stability, for example, like for them, quitting is not an easy thing. So I think that's also where a lot of this is coming in from, and a lot of people just trying to switch, sectors, trying to switch into a different industry to break into, right? They don't want to continue working for like minimum wage if they know that they get one certification off online or something and maybe they can move into, a better paying job.
I think that's all going to change very soon, very quickly. This quiet quitting. Once we actually start to feel this recession, obviously we were talking about it before with it kind of creeping on with the data and all that stuff, but once people start to realize it's a lot harder to get a decent job, it's going to be more like, it's going to go from I have to go to work to I get to go to work now.
Yep.
Like, I'm excited to go make money. I'm happy that I have a job. Thank God I have a job, because I wouldn't be able to provide or feed myself or anything like that. You get into hard times and it really starts to toughen you up. And honestly, I think that's what our generation needs anyway. All right, so we got that massive liquidity grab here on gold. Let me expand this over here. So I want to see a close outside of this area right here. This range that we're sitting in. Alright, once we start to break above that resistance here and get like a close above, we could possibly take something out. For any kind of buys. We have 263,000 jobs. So that's close to the lowest since, I think, December of 2020. Something like that.
Mm-hmm.
So, employment is not doing too well. We just kind of wait. Jason was this. That's exactly what I've done. Get rid of supply and demand. Well, I mean, Jason, so supply and demand pretty much is support resistance. Just another way of saying it. But I think what you want to do is, do you know basic price action? I'm sure Sharma's going to help you with that. But once you learn basic price action and how candles move and print and all that stuff, you're going to be able to use the same kind of strategy that you use on the 1 minute, more so on the 15, the 30 minute, the 1 hour, and you're going to catch plenty of trades throughout the week. Not as many as you would on the 1 minute, but you'll catch a lot less losses.
Yeah, I wouldn't. The lower the time frame gets, the more volatile it's going to get and the less confirmations that you're going to get. So you want to make sure, that's why I said like the 15 minute, 30 minute time frames. Yeah, you're going to have to wait a little bit longer, but you're going to get much better confirmations than the 1 minute, 5 minute time frames.
Much stronger.
Alright, so what I want to see here for US 30 as well, if we can take a look at the 15 minute time frame, please.
Sure.
So what I want to see is this candle's going to close in the next 7 minutes or so. So I want to see this candle closing above this 29,800 mark. So where price is pretty much, wicking around right now. Close above this and then make a bottom wick and push back up for any buy opportunities. But, it seems like a lot of other news outlets, they're holding on to this 275 that, they had put out in the beginning of the week. And I believe it was 265 actually. 265 that they had put out in the beginning of the week. And because of that, I do expect to see, a continued sell-off with this pair. But for that to happen, I would need it to close below the zone. And then the next candle give you a little bit of a top wick and then continue pushing right back down.
And of course, Jason, if you need any help as well, we'll be on these live sessions and stuff like that, so you could always ask me too.
Mm-hmm.
Patience, patience.
Yeah, I can absolutely help you with like scaling in, holding on to trades longer. That's what I do.
Yeah. Your specialty. Alright. Anybody have plans for the weekend? Sharma, you got anything going on? Andy?
I am just resting up a little bit. And then getting ready for the new week. We're gonna do a webinar. It's gonna be a fun weekend.
Good stuff.
I think, Matthew, for those cells, I would wait until this 1.11 entire clear instead of the 1.117 and all of that. Wait for an entire clear of this 1.11 area, or even that. Yeah, I would say 1.11. Because hop up to the 4-hour time frame, that's the previous consolidation support. Alright. Let's see if we can continue pushing down.
Did that retracement over here on US 30. I want to see if you can get that closed below the support here on the 1 minute, and maybe a little pullback in the lower high forms.
Mm-hmm.
And then maybe you can continue this thing down. Yeah, 1 minute closes, no bottom wick over here, so you can get that pullback into here. And that's a little bit better. I'm trading the reaction to the news, but I think your best bet is probably waiting for the next 4 minutes for this 15 minute to close above or below. Andy, how's business? How's everything going?
It's been good. It's been really good. Been editing a ton.
What was that?
I've been editing a ton, but the economy's taking a lot of attention right now. There's just so much going on.
Yeah, Andy, where did you first learn how to edit, would you say?
Back when I had an apparel branding business, I actually had editors and photographers and videographers on my team, as well as like designers and that kind of thing. So
Yeah.
that was just something we did every single day.
Okay.
And so I learned a lot by watching them, and then I just started trying on my own first, just things I cared about making and doing. And then I just kind of like found my little sweet spot, and I was like, I really love this, so turned into a company.
Awesome. I love it.
And you got
You
Cruise
use the
Productions.
Yeah, Cruise Productions.
The video that you guys will see when you go onto SharmaFX website, that was edited by Andy.
Which one?
I just made it like a part of my website, so if you go to SharmaFX.com, it's the first one that you will see on the homepage.
Let's check it out.
VJ shot it remote and just sent it to me. I was just chopped it up a little bit.
I'm sorry,
Sure,
Sharma.
great.
What was the website?
SharmaFX.com. Yeah, scroll down. You'll see the video loading up right here.
Oh, awesome. Got a little chat feature?
It's a little bit bright in the back, but I like it.
Next month, VJ's gonna buy a real camera.
Yes. I'll do ring light, so then you can't tell me to have better lighting.
That's
Hey,
all.
you're a good sport. You sent me your sample clip, and I sent you like 90 notes.
Yeah.
Take this, change that, do that.
It was perfect. It worked.
That is awesome.
Man, this thing is relentless right now. This 15 minutes.
Yeah.
Wow.
It looks like it wants to leave with us. See how we got that retest of this area? Get that pullback? And then we're continuing down over here a little bit. I've not taken anything yet. Just gonna wait for this 15 minute. I'm still kind of back testing NFP with the US 30, so I don't know if I'm gonna enter anything, but we'll see what we end up getting.
I'm gonna wait for the next 30 seconds. Just looking at the 5-minute time frame. The current one has no top wick. So I want to see the next one make a little bit of a top wick and then just push right back down.
Yeah.
Then it's a straight sell, going right into 28,800.
Yeah.
Where would you have your stop loss?
Probably right above the zone. It kind of depends on what entry do I get. Is the next candle just going to break these lows and continue pushing down? Then maybe a little bit of a wider stop loss because this current candle does not have a top wick either. But if I get a top wick and price pushes back down, then right below the zone.
Okay. Barely a bottom wick over here.
Yep. Well, that's weird. Your chart, this massive, my wick is even further down for this candle. My wick goes down to 29,660.
Wow, okay, so you get more of a range.
Yeah.
That's, liquidity providers.
Yep.
Alright, gold broke down over here pretty hard. You get that strong close below that level. Alright, so I'd expect some kind of a pullback here. Especially
you're at an hourly range at that 29,700 too. From last week.
Yep.
And it's just hanging out right on top of it.
That's why I want to see that top wick and then continue push down. That's that liquidity grab.
15 minute?
Oh, right here on the
hourly.
5 minute. Oh yeah, the resistance is on the hourly.
4 hour even. Minor.
Gold dropping down.
Alright, I'm in.
Beautiful.
Right, this is 29,686.52. And then TP, let's see if we can carry it down to 28,800. But of course, we're going to take partials along the way.
29,800?
28,800 is going to be TP. The entry was, give me 1 second, let me fix this chart. Entry was 29,686.52. Stop loss is 29,800. It's a wide stop loss, but we're taking an entry based off of this 5 minute candle that made us a top wick to continue pushing down. So if this 15 can continue showing me volume, I'm going to cut this stop loss in half and bring it down to 29,760.
Sure.
So again, the confirmation here is price. I'm going to annotate on your screen, Seth. But top wick, and then candle starts breaking previous lows. My concern with this candle, the reason why I didn't take an entry was there's no top wick and no bottom wick. A lot of times we've seen the following candle just make a little bit of a bottom wick and then just continue right back up. So that's why I didn't take an entry on this candle. But the current one, it is breaking the low, so what I want to see is can it continue breaking its own low after making that top wick. So continue pushing down, and then take some partials as price continues pushing into 29, let's say 500 mark, anything like that, somewhere further down here, and then reduce my stop loss even more.
I like it.
But I'm gonna use the higher time frames to carry this trade out, so potentially using the 30 minute, 15 minute, and 30 minute time frames. Because now we're also below that zone, Andy. That hour resistance zone.
Is anybody else in anything in here? Either YouTube or Zoom?
Anyone here on YouTube taking any trades?
Good gold. So now you're starting to enter the territory here on gold, where you're going to start having some safe sells, right? Going into New York Stock Exchange Open, I would expect some kind of a pullback, right? And then once we break below this level, 1695, I'd say 1695 500, you could definitely see price continuing down over here. Don't forget about that pullback for the 9:30 open. Alright.
And we're getting the volume.
What's that?
We're getting the volume.
Oh yeah.
Did you hop in, Andy?
I am going to wait for this full 30 minute to close.
All right.
Only because it's before NYSE. And it would not surprise me if it came back to grab some more at 750, at 29,750.
Mm-hmm.
I mean, it may not. I mean, it may not, but the floor isn't even open yet.
Yep. KB got in.
KB and Borga.
Perfect. Borga, you got
Nice.
into gold?
What was that?
Did Borga get into gold?
Yes. Yeah, he got a nice, I think it was on the 15 minute.
Oh, okay.
Yeah, right over here. Was able to get this as a pass the low of that candle.
All right. Andres is in US 30 as well.
Yep. Nice.
I'm just waiting for a little bit more push, and then I'm going to end up taking partials here. But I'm going to look for a re-entry later on. But I'm going to try to secure, I would say like around 70% of my trade here and reduce my stop loss.
Yep.
Right before New York Stock Exchange open. Because exactly what you said, Andy. Wouldn't be surprised if price tried to push back up into this 29,800 area just to grab more and then continue pushing.
Yeah, this 29,600 was last week's open, so it's a key price at a weekly candle. So I'm hanging out.
In the current 30-minute, there's no top wick, and we just continue breaking our own lows. So that's a lot of volume that has yet to be corrected.
Yeah.
Yeah, Lewis and Leary, that's completely fine. Like, all you want to do is just learn from this now and see, like, all right, how can I journal this and get better from it, and then enter it next time, right? So that's the main thing, the fact that you're taking notes and, journaling these moves. Right now, for me, I'm just waiting on these pullbacks here, right? NYSE, you're going to get a nice move later on today. Instead of just trying to catch the falling knife, you're waiting for your actual setup and then taking this down. Every once in a while, me personally, I'll grab some of these moves, but most of the time, I'm just really waiting for, the volume to slow down just a little bit, us to pull back, we get a perfect low that was created or a high that was created, and then we retest that high, and that's my move for the day, and I'm done for the morning, done for the week.
Yep. So, Luis, to answer your question, if there were positive numbers, why is the market going down? That was just Forex Factory that has kind of manipulated the data. When you're looking at other news outlets, Andy, can I share the link that you sent me?
Yeah, of course. Can I give a one sentence answer?
Oh, go for it.
It leaves room for the Fed to continue tightening. So when the jobs come out good, it means that the current efforts at this point, which have been pretty drastic, still are not enough to see the effects that they need to have happen in the labor markets.
There you go. And I also just dropped the link for you guys, so if you guys want to check that out. CNBC had still kept the 275 as the projected NFP data, but obviously it came out lower than that. Alright, we got 5 minutes before...
Dow Jones estimate, 275.
So we got 5 minutes before New York Stock Exchange opens. I'm going to start taking some partials here, just to secure something. And if price just continues dumping down, that's perfect, because then we're going to look for a scaling.
Beautiful. And now gold, you guys see prices kind of like bouncing back above this level, right over here. So can we close above or below it here? On the 30-minute, the 1 hour, 15-minute. And then, not to mention the 1 hour here on gold, you could very well, close below, and then we could get that pullback before NYC. But then you have the 4 hour candle closing too.
Yep.
So you're gonna have this 4 hour candle closing in the next 6 minutes. So can we close below it and the next one fills this wick over here. It's a clean move over here to the left, and we could continue this move all the rest of the day.
Best case scenario is this candle closing in or below the zone. The next one gives you a top wick. So always account when higher time frame candles are closing, daily, 4 hour, 1 hour. Whenever these time frame candles are closing, always account for, can price make a top wick before continuing down, because that top wick is a liquidity wick. If you get that and price continues pushing down, you have a lot more volume in the market than just no top wick and then price pushing down. I think I saw a question here. Very interesting in how you scale in. I can definitely, draw out potential options here. I'm gonna annotate again, Steph.
Yeah.
But let's say, this candle ends up closing, in the range that it's in. What I want to see, there's like two things I essentially want to see before I scale in. The first one is, can I get a break and retest? That's ideal, right? That's always number one. If not that, can I get a top wick and then price continues breaking its own low? So what I mean by that, let's say when the candle starts forming, it starts fluctuating something like this, like leaving a bottom wick. When I say break its own low, what I mean is price continuing to fill that wick, right? Fill that wick and drop down a little bit lower and created a bottom wick, right? So now it broke the previous low it had tested and created a new low, essentially. And then, let's say it continues filling even that after fluctuating a little bit and then leaves another bottom wick. So again, it filled that low and then it ended up creating another new low. So that's what I mean by, testing its own volume, breaking its own low. Same thing for a bullish candle, where you would want to see price, essentially, let's say it closes something like this, or like not even closes, but like, it's open right now and it started forming something like this, and then it fills its own wick, and then it ends up leaving a little bit of a top range. So it filled its own high and then came up and created a new high, right? The candle is still open. I'm just talking about like in terms of fluctuations, this is what you're going to end up seeing. Comes back, fills the same exact thing, and then leaves a higher top wick. That's candle testing its bullish volume. So either that or, just give me a top wick and then continue pushing down and keep showing me the volume. We've got just below 3 minutes until New York Stock Exchange opens, so if you guys are in a trade, make sure you are taking partials.
We're at 3 minutes left of this 30-minute, 1 hour, 4 hour to close.
Yeah. Sellers are closing their hourly position, so that's why that price is going to whip back on the 5 minute, guys.
Mm-hmm. So if you want to hold on to this trade, make sure you're managing your stop loss accordingly. So what I've done is I close out 70% of my trade, but my stop loss is still at the same level. Nothing has really changed there. So yes, it is wide, but I'm giving price enough to, make those top wicks, bottom wicks continue pushing down on these new 4 hour and hourly candles.
Well, it's wide, but it's relative. You're trying to run this thing for 1,000 points, so
Yep.
Not that wide. What's your ratio to, what is it?
It's 7.81. Risk to reward, 7.81.
Yeah, there you go.
Alright, does all of this make sense to everyone? The way that we just took the trades, managed it, broke down these pairs. Any questions on YouTube or on Zoom here? Oh, housing market. This is your time to shine, Andy. Go for it.
Oh my God.
Have them loose.
There's the shortest answer is that affordability is the number one problem. As the Fed continues to increase interest rates, the mortgage-backed security market follows suit, and money becomes more expensive. As money becomes more expensive, sellers cannot sell at the top anymore because there's not enough people left that can afford at that price. So you're just going to see price reductions in your area. Depending on where you live and how rural or how urban it is, the price declines will be more corrections than collapses. So you're looking to buy a house right now. Yeah, it is rough out there. So my family owns a mortgage company. We've had a mortgage company since 2005. It's the primary reason why I look at the markets. So it is a challenge, but it is by design. They need to cool down house prices, and also they just needed to ratchet down lending, and that is part and parcel of what this is, the inflation battle and all that. So I just made a video yesterday talking about how there will be opportunities in quarter four and in 2023 for people, specifically because there will always be a reason for people to have to buy and sell. And if anyone who's looking to buy a house today or in the near future, like 6-12 months, just be prepared, but keep your eyes open and start watching really closely the neighborhoods you want to move into, types of communities you want to be in. There will be opportunities to be had, and there will be sellers dramatically dropping prices to move.
Absolutely. You're already starting to see that right now.
Yep. I was telling VJ maybe a week or two ago, there's a ranch I had my eyes on east of where I live right now. It was 21 acres, and it was 3 separate parcels.
Yep.
And it was originally listed for 1.8 million, and it sold for 1.4. So it had a 21% price drop on this specific part of San Diego.
I think it's going to happen more too, because all these inflated markets across the world, not even just in the United States, like the inflated markets that we're seeing in some parts of Europe, some parts of Asia, all of those are seeing heavy corrections.
Yep.
And obviously that all is going to get trickled down essentially into the United States as well.
Yep.
Just looking at how everything's kind of connected.
Yeah. It's going to be slow. It's going to be slow.
Yep. Global economy 101.
Yeah, England has an interesting problem because they have a very high percentage of adjustable rate mortgages, which as their central bank continues to ratchet rates, that just becomes more expensive when people's adjustable terms start.
Yep.
So they may only have a fixed period of 2 years or 5 years or some sort like that, and then once it becomes adjustable, then you really start seeing the crunch of people being able to afford that or not. And then you mix that in with their fixed income and their energy expenses going up, their food expenses going up, their fuel expenses going up. It's like now every month your bills and expenses are fighting for your personal dollar earned.
Mm-hmm. It's going to be an interesting time, definitely. Because in the United States, just in California, because that's where I'm in, and Bay Area specifically, like that, Bay Area, Los Angeles, like some of these areas, they're known to be expensive, right? But we've been seeing massive price increases in 2020 and even last year. And now all of that is starting to, correct back down slowly.
Yeah, there's a recent Black Knight report came out, and 16, they cited 16 cities that already have price easing happening,
Mm-hmm.
and 6 of those 16 were in California.
Mm-hmm.
The question was, could anything change for new construction homes? Yes, new construction permits are probably going to slow down. Even though there's housing demand, the cost of building homes is getting increasingly higher for home builders. But also, as there's less and less people able to afford because of the cost of borrowing money, they may start making better deals. They may be offering closing costs towards buying down your rate and buying down your points. They may be offering incentives for upgrades in the house. Maybe price declines. I mean, they're think of it like a car lot. They're trying to move as many cars a month as possible. So they're trying to move as many houses as possible. And when the financing terms change, it really puts a cramp on them for how to sell those houses.
What's your take on existing home sales kind of being the the forecasting data for new construction?
I'm mixed. I'm mixed because even though there's a high housing demand, people that at least here in San Diego, a lot of people that have land and space, they're building ADUs. They're building accessory dwelling units.
Yeah.
To have an extra unit or convert a garage. Or build a second story on a one story. Like they're doing other things to their property versus selling it because they refinanced in 2020 or 21. So, I mean, we have case in point in 2021, we refinanced or did purchase loans for like 200 people. So it was just shy of like $100 million in loans, but they were like under 3%. So anyone who's under 3% right now, has to weigh the decision of whether I'm going to move and then go into a new house with a 6.5% or 7% rate. Yeah, they'll get all their equity and they'll make all their cash, but they're going to dump that right into the new home. And anyone who doesn't want to move, they're not going to refinance their house. They're going to expand on it and create some residual income and some streaming income by having a rental there.
I think just making the move right now, trying to pull the equity out and then you put that into another house doesn't seem to make sense. Because
Unless
I think
you have to do it, people aren't doing it.
Yeah. And I think just waiting for these prices to continue dropping down further makes a lot more sense. If you don't have to
smart
move.
money's going to wait for a cheaper price.
Yeah. Exactly.
There's a comment about credit cards being the next biggest crash for inability. Totally agree. Personal credit debt, if you look at the St. Louis Fed chart, personal credit debt is through the roof.
Yep.
So there's already a lot of car repossessions happening. I have a nephew who works at a Dodge dealership up in LA, and he's like, they're taking cars back left and right. It's ridiculous.
And it's going to continue happening as these rates continue to increase, and they're not going to stop that. They can't stop that because of inflation.
No, and so going back to today's job reading, it's like, okay, well, there hasn't been enough of an impact in the labor market. This leaves room for the Fed to run another 75 basis point hike when they meet next month.
Yep.
So the market is pre-expecting that by selling off already.
What do you guys think of this setup here in US 30?
I don't like it.
Okay.
Really?
I don't like it yet because it only came back to the 29,700.
Yeah. It made that top wick. So what I want to see is price continue to break below this. So top wick on the hourly time frame. If you want to hop back up to that real quick just to show it to them. Quick flash. A top wick and then a push down. So what I want to see is I think we're done with the 5-minute time frame at this point. You would want to look at the 15-minute time frame, and the last 15-minute candle obviously closed with a massive bottom wick. If we want to drop down to the 15 real quick, please.
Sure.
Yeah, so massive bottom wick rejection. So what I want to see is we've come back up to retest into the previous high. That's where we ended up making this top wick. But can we continue pushing below this? Here. And then ideally I want to see some form of break and retest prior to continuation down. Either like the break and retest 3 candle formation, or just a top wick and then continue breaking this low here.
Well, big money isn't in the room yet.
Yep.
Big money has not entered the chat.
Alright, so I do have to hop off, in the next couple of minutes or so, but there's one question. Can you describe what pricing in means? So pricing in essentially means whenever there's news coming out, right, and there's like economic data that's about to come out, there are people, investors in general, they're going to look at what are we expecting, right, given, let's say you're looking at NFP, you're looking at, if you were to trade NFP, let's say you were looking at ADP non-farm that came out. You're looking at JOLTS job openings. You're looking at challenger job cuts. You're looking at unemployment claims. You take a look at all of this, and then you take a look at, what is the NFP forecasted? Is it lower than the previous? So you take in all this economic data that came out, and you start to execute on that information. So pricing in essentially means investors executing on information and trying to buy it at quote-unquote discounted level. If you think, for example, US 30 has been pushing the entire week and all this data is coming out, and you think at NFP, I know this is going to reflect all the data that I've been seeing this entire week, and I know that NFP data is going to come out weaker than previous. Obviously you want to sell at a high level, right? So when US 30 started tapping into 30,000, when it started tapping into like 31,200, something like that, into some of those key areas from higher time frames, you're going to start taking in some positions, right? Or let's say the expected is challenge, or the jobs opening, you started to see better than previous numbers coming out. Challenger job cuts, you saw less jobs being cut. You saw unemployment claims, starting to decrease down, so there's not a lot of unemployment claims. And prices tapping into a higher time frame support area, you're going to try to buy it at a discounted level and then try to run it up. So pricing it essentially means, fundamental data that's about to come out, the market's already getting ready for it. Does that answer your question, Dallas?
What's his name? Dallas?
Dallas Gardner.
What's a cool name?
Yep.
There's also there's also why they're called futures.
Mm-hmm.
It's pacing the future price and future earnings based on data we know today.
Absolutely. Alright, we got 5 minutes on this next 15-minute candle. So as you can see, obviously you're starting to see that little bit of a die down in the volume. That's why another indication, can we see a potential pushback up into 29,800, maybe a little bit higher than that, and then a continued push down.
Yeah, that's what I'm looking for. Nice little pull back, get our setup formed on these higher time frames,
Mm-hmm.
and take this thing down.
Yeah, that 30 minutes looking really awesome. Take the come back and re-grab it.
Yeah,
29,750, 29,800.
Dallas, what I would suggest is I have like a series called Basics of Forex. So if you want to take a look at that, it kind of explains these concepts. And then you also have like the weekly outlooks that we do, some of these previous live sessions that should give you like a good understanding of how do fundamentals affect technicals. So to give you like a quick answer, and things that you will find out in these videos is just that fundamental are, obviously news, but they're the drivers of the market. So whenever price from a technical level taps into a weekly resistance, a monthly resistance, a quarterly resistance, or support areas, that's when you're going to see news coming out. And then the news is essentially what's going to drive the markets. It's going to drive the market sentiment first. So when specific news comes out, what kind of sentiment does that put out for investors? And then investors are going to execute based on that sentiment. And so technicals are basically just a visual representation of market sentiment, which is created by fundamentals. Alright, I gotta hop off, guys, but make sure you guys are trading safe. If you guys have any questions, as always, feel free to reach out to either of us, so Stefanos or myself. But today we won't be able to do a simulation session. Unfortunately, I will have to cancel that, but I will see you guys next week.
Yeah, we'll pick it up next week. Guys, have a safe weekend. Have a great weekend. Remember to review your pairs this weekend, right? Whether it's today or tomorrow, just go back and do a full review of what you had the previous week. What moves we got on Monday, Tuesday, Wednesday. How can you grab those next week? And just do a full backtesting session on both your pairs that you've been trading. So that's a massive help for you guys. But journal all those trades you would have been taking and just do a full review of how you would have performed this week if you were to go back and do it again. So again, if you guys need any help at all, please reach out to us. We're more than happy to help. But I'm looking forward to seeing you guys next week, and have a good weekend.
Absolutely. Have a great